The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the May 7th magnificent Monday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And, of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstances of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in 877-927-6648. If you can't dial in, let those fingers do the walking. You can always send me an email, steve@tfnn.com. Just please, inside the subject heading, put radio show question. And, of course, well, inside that Tiger's Den, and just about any ping will do. So let's go ahead and get this show started on magnificent, magical Monday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow trading up 140 points. 24,402 is the print. S&P up 11, 2675. NASDAQ up 51. That's 0.7% to the upside. Russell's up over 1%. 16-point to Rooney's. 1582 is where she's printing. So you've got mean and green across the board, including the spot volatility index, up 19 cents as we speak. That's a little over 1%. Well below its 50-day exponential moving average line. Gold's off $1, silver's off 2 pennies. Light sweet crude up 82 cents. Leading the chart here to the upside, it's Athena Health. Dollar-wise, $19 and change, 15%. Amazon is up 15. Booking Holdings up 15. Illumina up nearly 11. That's 4%. Lending Tree up about 4, a little over 4%. That's about $11 as well. Nvidia up 10. Weibo up 9. To the downside, it is International Flowers, I think, down $14 or nearly 10%. Equinix off 650. Universal Display, OLED is a ticker symbol. She's down $6. IDEX Labs off 5. Anthem off 450. So there's plenty to look at, but we want to look at what you want to look at. And the first request is to go take a look at Alibaba. So let's go ahead and do that. Let me do this first. BA is the ticker symbol, and BAB, this comes from one of our Denners. I believe the Denner is long. Let's see here. Long before earnings. I don't know when earnings are. I don't have that on my system here, but regardless, let's just simply go take a look at Alibaba. It's priced right now at $194.70. It's coming into a gap here. This is a resistance level, so you're going to want to see this window get repaired. And what I mean by that is preferably to see it close above 194.57. Now, what I'm giving you is the moment-by-moment, the day-by-day call on this. If it closes below that level today, it doesn't necessarily say you have to get out of the trade. In fact, with regard to getting out of the trade, it would need to be a close below Stevie's red line, 180.60. But S&P, here's what I want you to anticipate. That over the coming week, this week, most likely, but I can't say for sure this week, but over the coming days, most likely during this week, you're going to see, in the case of Alibaba, or you should see, Price and Stevie's red line catch up to each other. That's 180.60. You're 194.74. I don't know where that merger of those two takes place. The reason I suggest that is because you can see the price oscillator. Very bottom panel of the screen is at basically the zero line. It is minus 0.234. So very close to zero out here. Now we come back to this chart. We're going to go take a look at the volume metrics, see if we can figure out what's going on at this open window, this gap to the downside, see if there's a window repair kit. And any close above 194.57 would do that. To the downside, the gap was 25 million shares. You're up with 20 million shares. So you're moving into the gap to the downside with volume. And the swing point, the most recent swing point, has 33 million shares, and that is on March the 15th. If we take 20 million shares right now, SNP is the code name out here. 20.5 is the equivalent of 38 million shares. You're moving into its swing point with volume. I say you got to stay here. Now, again, I don't know where you're long from this thing. You are going to see Stevie's red line and price eventually catch up to each other. But right now, as I take a look at the daily time frame chart, your preference is to see a close above 194.57. That suggests at least getting up into the, I'd have to say, 201.50, and then no reason for it to not go tag 202.80 to 206.20, and that swing point only has 26 million shares out there. So best of luck on that trade. All right, so we took care of question number one. Let's go take a look at, there's a lot to look at, but of course I want to look at what you want to look at. You know the routine out here. But if we take a look at what's going on the short-term basis, just the short term, we'll take a look at, and when I say short-term, I mean short-term, because we're taking a look at what's going on amongst the 30-minute time frame charts for the equity futures contracts. The patterns that you and I trade, they're the same, and they work on all different time frames. And if you and I do our little wave count from the low out here, the low, by the way, that I'm referring to is 11 o'clock in the morning. This is on the ES Mini. This takes us back into the trading day. I'd like to give it to you. I want to give it to you. And that's on the trading day of May the 3rd. If you start doing your wave count to the upside, went to a Yankee game. They were doing the wave. It was crazy how much waving they were doing. And of course, by the 7th or 8th inning out there, I think a few fans, 80,000 or so, had a few pops. And in any event out here, speaking of waves, this got up to the 7th wave out here. This took place at 10 o'clock. You got a confirmation at 10:30. Normally when you get to that wave, that says, okay, time for something else. In this case here, a pullback, a sideways move. Well, it was right here as we were coming on the air at 1300 hours, 1 o'clock exactly, when you saw the bearish reversal candle. This is inside the 30-minute chart for the ES Mini. You see prices below Stevie's red line. That suggests to you and suggests to me we ought to see some kind of retracement here. The question is retracement to where? Again, we're looking at a 30-minute time frame chart because the retracement can exhaust itself, you know, within the next hour or so, or even during this hour. So how are we going to make a determination as to where price is headed to? And why will price continue to pull back? Well, if we take a look at a 30-minute market breadth meter out here, you're going to see that we had a bearish crossover. This took place at 12:45. Remember, we got the bearish reversal candle at 1 o'clock. So 15 minutes earlier, we saw market breadth wane in the S&P 500. So where is it that price should pull back to? Well, that's very easy for you and I to calculate because that level would be 2668 and 1 tick, 0.25. That is where price ought to pull back to. Will it find support there? It should, but if it doesn't, uh-oh. Steve Rhodes with TFNN, singing in the key of G. We'll be right back. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done. which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Are you an options trader that's looking for that extra edge when placing trades? David White will be hosting a webinar on May 16th, which is the Wednesday leading up to options expiration Friday in May, where he'll discuss in depth the methodology he uses for trading options near expiration, including swing trading setups and expiration day trading scenarios. Subscribers to each of Dave's newsletters, Path of Least Resistance and the Technology Insider, gain access to this 60-minute webinar, which will be archived if you cannot attend live. Dave has had some great option trades recently for his subscribers. See for yourself the trading methodology he uses when trading options by signing up today for either of his newsletters, and we'll see you Wednesday, May 16th at 5 p.m. for option trading near expiration, analyzing swing trades and expiration day scenarios. For all the details and to sign up today, visit the front page of TFNN.com.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Yes, Steve does take your phone calls and your emails and your instant messages inside the Tiger's Den. So we took a look here, just as we were going off the air. Where's the first price target for this pullback decline inside the ES Mini? And we're looking at the bottom of its 60-minute. I apologize. Oh, that's the. I had the 30-minute chart up, didn't I? Let me just change the 30-minute time frame here in the left-hand side. And so the 30-minute says you head back to 2668 as well. That's the top of the 30-minute profile out here. That also happened to be, now let's put the 60-minute time frame, the bottom of the 60-minute area. Now, do I anticipate that that level's going to hold? As of 1:18 in the afternoon, I do. But that could change. Why do I say I do, like I'm going to marry you? I say I do because I do. Because as we speak right now, the 60-minute TAS market profile breath-o-meter out here is still bullish, meaning that as of 1:19 in the afternoon, 219 constituents are trading above the top of their 60-minute profile versus 120 below the bottom. So market breadth is relatively strong, nearly 2-to-1 out here, not exactly, but nearly 2-to-1. So that should be the intraday pullback out here. If this switches, which it could, then we would have a different story. And that different story would be just at this stage here, I'd have to say just a few points lower. Again, we're just looking at the ES Mini. That few points lower, by the way, I'll give you the exact number, is 2662. So that's about what? 6 points lower. 2663 is what we'll call it out here as far as a pullback. If the ES Mini gets below that, then we have a different story. But all we can do is read this chapter, which is where we're at right now, and what it is that we expect and anticipate to happen. By the way, It is a trio of messages singing in the key of G. Quite a harmony. Because if we take a look at the NQ out here, the NQ on its 30-minute time frame, singing in the key of G. By the way, I believe the same thing on the 60-minute time frame, or at least Stevie's topping pattern out here. So there is your NQ, and the YM, that's the Russell 2, I'm sorry, that is the Dow Equity Futures contract, also with the same pattern. Now, inside of the Dow, what we don't have is any kind of bullish reversal signal. So it's kind of taking its cue, so to speak, from the ES and the NQs out there. So that's what's going on the shorter term time frame out here. What else might be happening? There was a question that came in earlier, and I apologize. I right now forget the name of the name of the individual that sent me the email. My apology. But the question was, where's Apple headed to? And that's a great question. So let's go take a look at where is Apple headed to. Let's look at it like this. Let's make sure we have, and Apple has pulled back off of its highs. Does that mean that's it? Kaput, adios, amigos, all of those things out there? The answer is no. Let's put this on a bit of a perspective out here. And that perspective says, hey, Steve-O, why don't you get rid of some of the lines? From a weekly perspective, what you and I can take a look at is March the 12th. That swing point high was 183.50. 155 million shares traded hands that week. What did we do last week? Last week we did 252 million shares. We closed above that swing point high. That is wide price spread. That is accelerated volume. The weekly time frame chart says that where Apple is headed to is at least the completion of an A to B equals CD to the upside. By the way, the daily time frame also confirmed this. This is something you and I identified before Apple released their earnings. You had pointed out to me that Apple had created a Gartley buy pattern, right? We looked at it before they released earnings. The question came in from Eddie, is the market just waiting on Apple out there? And when we took a look at Apple for clues out here, because you and I are market timers, we saw that there was a completed pattern. We said there were always 5 potential outcomes. You and I just looked at outcomes number 1 through 4. Well, Apple happens to be in outcome number 5. And if we looked at the daily time frame chart, we're going to end up with the exact same A to B equals CD. So no reason for us to actually go over there and do that. But what you can see is that the price target is 193.89. That's the 1-to-1 A to B equals CD. Does that mean that's where price stops? No, not exactly, because the way the price came off of that C point last week, that's explosive. And that says, hey, Apple could easily get up to 202.94. So whoever sent in that question, I apologize for forgetting your name, but that is where Apple is headed to. Now, a name that none of us will forget is Garo in California. So let's go out to Garo, see how he's doing. Garo, thanks for calling. Thanks for holding. How are you today?
I'm very good. How about you, sir?
Very well. Thank you so much for asking. And tell the folks what it is that you're trading and how it is that I can assist you.
There are 2 stocks. One is MELI.
Yes.
It's e-commerce from South America. I've been watching this. I want to see that. What's your opinion regarding the weekly chart? Is it turning? Is it building the bottom of the cup? And it's going to rotate up. It's a little bit fresh. Still a 5-day. It still is below the 21-day.
I see that.
It has to turn, and that 5-day has to cross the 21-day and hit the upper dot, and from there it's going to go open up a new high. Or you think that it's going to come and hit that 50-day simple moving average at the bottom, which it did in October of last year.
Can I ask you a question? Because specifically, normally you take a look at the daily time frames and so forth. Why are you focused on the weekly chart on this? And then I'll answer your question with regard to where I think it's headed to. But why the weekly at this stage for Mercado Libre?
Yeah, the daily, I think it's been done. It's already been cooked because the MACD, it rolled up. It crossed over. But the possibility of going down is way lower than the probability of going high.
Okay.
You see the MACD is already at the very bottom, and it rolled over about 2-3 days ago.
Yeah.
And the dots are at the bottom. But if the candle goes and hits the lower dot and it goes to 200-day, it may stay there for a few days, maybe 2-3 days. But from there on, I will think it will roll up. That is number one. The second is that the 5-day crossed that 21-day.
Sure.
You see, yeah. These are, of course, it may go down to $300. I don't know, but this is things that the possibility that I'm watching.
Sure. So
but to me, the weekly chart, it interested me.
Yes, I get that. So what you're saying is, hey, look, the daily chart looks like that has turned here, and so you just want to understand on a weekly time frame, what does the pattern actually look like? And so from a weekly standpoint, there are a couple of areas that I would suggest to you, Mercado Libre, whether it's weekly or daily at this stage here, may find resistance. And it really has been trading for a number of weeks in a range. And that range, the top of which is 350, 335. So although that is well below your weekly dot as we speak right now, if price is able to close above that level, your dot should be hit, which on my system on a weekly basis, 372.25. Gal, we're out of time, but could you wait through this next break, and then we'll come back. We'll take a look at Mercado Libre and the other equity that you want to look at as well. Steve Rhodes with TFNN. Got the Dow up 160 and change. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 154. S&P is up 14. We're on the line with Garo in California, and we're taking a look at Mercado Libre. The ticker symbol there is MELI. And the question is, what do I see on my charts? Where is this thing headed to? And the answer at this stage here, I see no reason, Garo, why Mercado Libre will not at least tag 349.05. There is and I know you don't necessarily use volume, but the most recent swing point out here was April 27th. So just a handful of days ago, and as price had gotten up to that level, it was with 530,000 shares. As we speak right now at 130, there's 396,000 shares. So if price is trading into the low of that level, and it's doing it with volume. So really that high, 354, even Steven, should be tested out there. On the weekly basis, which you had asked about, if price can close over that level, then I would say 362.68 would be my target level. It needs to close above that for my system to say that the weekly time frame has changed, which is going to be different than your weekly parabolic SAR, which is at the 372 level. So we're off by about $10, but I would say you get above 362, then it goes and hits your weekly parabolic SAR out there. So that's what I see when I look at the chart.
Yes. It's going to take at least 2 to 3 weeks until that 5-day crosses the 21-day up. By that time, the dots will go lower, and somewhere that intercept the candle with the upper dot at 361, 362. That is lots of possibility. At that time, I'm going to be buying it, not now, because the other chart, if you look at it, Mr. Steve, it's CRM, Charlie, Robert, Mary, the sales force.
Yes.
Please.
Tell us what you're doing here. On the
weekly chart, today the first dot went down when the candle hit there. You see, I'm waiting for that formation for that MELI. You see, if it doesn't come to that formation, you're taking chances, you're gambling. You see, but if you want to make sure that you lose your chances to lose and make more money, you have to wait for this formation. This is something that I'm in it today. I bought it.
Okay.
And the way that I'm looking at it, the max that is going to go up is 133.44. I want to see if you have such a number there.
So in order to come up with Mercado Libre, if we take a look at it like this, Carl, my eyes go right now, to answer your question, to the April 18th swing point. And that had volume out there. Let me clear my screen a bit. That had volume of 4.3 million shares. You're at 2.2 right now. Let me just see what the straight line math gives me. 2.2 says we do about 3.5 today. And it would be crossing this swing point from April 18th with lighter volume. If it was doing it with volume, then I would say you've got a confirmed A to B equals CD to the upside. That doesn't mean that price still can't complete that level out there, and in fact it's likely going to hit the 1-to-1 area of 128.44, but more likely than not, because of the way that price has been moving off of the low from April 25th, I would come up with a figure of around 132.08. Now, in the case of Salesforce, and this is really important, because when I take a look at the way that markets make significant tops out here, Salesforce on a weekly basis created that pattern. And it did that with price moving higher, doing less relative energy, and the confirmation actually took place on March 23rd. So if price closes over the high from March the 16th, you've taken out a significant resistance level. And I could easily make the argument then that Salesforce, old resistance becomes new support. And unless price were to close back below 128.87, I could find a larger A to B equals CD to the upside inside of Salesforce. The question becomes, where do I really want to start with regard to my swing points? But on a conservative basis, I would come up with 137.80, 145.04, something along those lines. So what Salesforce is doing doesn't necessarily have the volume you'd like to see as it tries to blow through these swing points out here. Even the high on a daily basis, Gar, was March 14th, 5.4 million shares. You'd just like to see more participation from buyers than what we're seeing. But at this stage here, I still have to, it still chart looks like it, volume or not, wants to move up to 128 to 132. That's the way that I see it.
I see.
Does that help you?
Very well. Very well. I wrote all the numbers that you said, and
okay.
I'm going to trade it on a daily basis.
Yes.
And I'm going to see how it works, and then I'll call you back for the next week, and then we'll go from there.
Yeah, watch that 128.87 level, which is the all-time high at this stage. And if it can get above,
I don't have one. I have 129.64. I don't have 128 and change.
So March 14th high, 128.87 is what I have out there.
So
maybe I have a bad tick or something, but
no. I see. Yeah, exactly. But
okay.
I don't here. It shows that this will go. The first resistance is 129.64, and the way it shows that it's going to stay there. Maybe it's going to hover there for a week to 10 days. And from there, it's going to the next step, but it's going to reach to 133.44. That's what the chart or the software is showing to me.
Okay, perfect. Okay, hey, always great to hear from you, and I know that our folks that are listening, they love to hear from you as well. So call often, my friend.
I will. Thank you, sir. Thank you.
Bye-bye. That was Garo in California, who is the master of the parabolic SAR system, as well as, well, several other things, the 5 and 21-day simple moving average, 200 simple moving average. So there's a number of different ways to be able to utilize tools to trade. He's got confidence with what he does, and what's nice is that we both are able to integrate different systems to see what type of information that it provides to both of us out there. So thanks again for the call. So right now the Dow's up 167, S&P is up 15, and was there another question? I just want to make sure that I get to everything. Question was, where's the 2668.25 coming from? That was from Maria. And the 2668 level, Maria, was coming from two different places out here inside the ES Mini. The first was the bottom of its current 60-minute profile. And if we take a look, let me just expand the chart up here. So we'll do this. Let me come back and let me just turn off price. It'll just be less chaos out here. So we're taking a look at a brand new box out here. Okay, Maria's got it. It's a bullish structured box. Says that really should hold. Now, what we never know about these bullish or bearish structured boxes, we always have to remember that the light blue line or the center line is the price where both buyers and sellers are most comfortable. So to the downside, that really becomes your first target, which is 2672. But below that, the real buyers are lined up between 2668 and 2672. Maria, it also just happened to coincide on a 30-minute basis with the top of its profile level. That was a bearish structured profile, 2668. So as we turn price back on right now, that really becomes support. Old resistance becomes new support. So 2668, strong level out there for the ES Mini in order to be able to hold that level. This is Steve Rhodes with TFNN. Right now we have the Dow up 159, S&P's up 14. Be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So one of our Tigers, Phil, wants to go ahead and take a look at biotelemetry. BEAT is the ticker symbol. Much easier to say beat out here. And what Phil is looking for is whether or not there's a validated B equals CDT upside. We're going to take a look at, right now you can see the price is trading at 41 bucks. Well above the September 11, 2017, the week that began. We're looking at a weekly chart out there, high of 39.20. Oh, okay. All right. Maybe not well above, but certainly above that level. Look, that was a big old bearish engulfing candle. Weekly chart. Phil, if price closes above 39.20, and it doesn't look like it's going to do with volume, old resistance becomes new support out here. The volume that we can take a look at metrics-wise, 3 million a couple weeks ago was going into the 3.9 million. Last week was 2.7. So, but the A to B equals CD, what I would be looking at is a January 22nd, which had 1.8 million shares, and that was crossed with wide price spread and accelerated volume. So the A to B equals CD, that's been confirmed on this equity out here, gives you a 1-to-1 price projection like 42.35. So what you have going, and I say, nice trade out there. You'd like to see this close above the high of September 11th, the week that began, 39.20. But just because it has a 1-to-1 at 42.35 does not mean that's where price is going to stop. And I would say in this instance, price will not stop at 42.35. Maybe it can stop there for a day or two or however long, but it really does look like this will be one of the larger A to B equals CD patterns. 45.75, 50.07, would be a couple of those price targets out there. So, yes, it's a confirmed A to B equals CD on a weekly basis, just as Apple is on a weekly and on a daily time frame chart out there. We had a request to go take a look at Snap, Crackle, and Pop out here. So if we take a look at Snap, the weekly chart basically disgusting. Nobody inside this equity is in the money. Well, there's a couple of people, because at this stage here, the all-time low, 1051. That was from last week. It's trading at 1074. So anyone who is in the money, it's just by a smidgen out here. Do we see on a weekly chart? Now, there's no bottom in sight in the case of Snap. On a daily time frame, no, there's nothing. Is there a pattern? Here's a daily time frame chart. By the way, no. Where's Stevie's red line? 1248. Price would have to get above 1248. That'd be a heck of a move, by the way, because at this stage here, that would be almost a 20% move off of this low. I don't see any signal. Today is going to be a TD 9 count on the setup, but that's not good enough to say go ahead and take a long trade. Is there any way that we can come up with some kind of price projection to the downside out here? And I don't know. When you have charts like this, really, where do you put the B point of the A to B equals CD out here? And you're probably saying, and Steve, you're asking me, I thought you were the master of that. Well, here's one of the A to B equals CDs out here. But here's what we know. Until we see a bullish reversal signal, Mike, you can hope and pray all you want with regard to a short covering rally. Let's put it to you like this. Take a look at what the technology sector has done over the last couple of days and what Snap is doing out here. So where is that short covering rally going to really come from? When is it going to come? Now, look, I am not the expert in that, but David White, ask him. He follows, the short interest in these equities out here. The guys and gals that are short a $10 equity. You've got to say, what are they thinking? Now, I can understand maybe being short at 22. I suppose I can. But I cannot, for the life of me, this is an individual stock, understand how any individual, unless they believe the stock is going out of business, could be short an equity like this. So I don't know what the short, how many days to cover is inside of Snap, but I would tell you I would never recommend to you or anyone else out there to short a $10 individual stock. How much money can you? This thing was at $22 just a few weeks ago, and it's got volume up there. And I see what you could be looking at, but there's nothing here to indicate that there's any kind of bottom in Snap, Crackle, or Pop. Tarpon 2 wants to go ahead and take a look at Box. So as we take a look at Box, this is taking out swing points as we speak. On a daily basis, volume behind this equity so far, about 3.3 million shares. Looks like this is at all-time highs. The most previous swing point at 3.1 million, you're at 3.3, so that looks pretty good. Let's put this on a longer-term time frame for Tarpon 2, and while I'm doing that, I see where it is now. Now that we put this on a weekly chart, it's all the way back, finally, it's all the way back to its all-time highs, which was January in 2015. Now, by the way, that all-time high was at 2473 or 2550. So if I look at a daily time frame chart to try to identify any kind of pattern to be concerned with, Tarpon, you're saying 4 along? Not now. Nah. Sorry, no can do. Your time to have gone long, if you were looking at this, would have been right around the trading day of April 21st, April 24th out there, as the price oscillator, bottom panel of my screen, Tarpon, was getting to zero. And on that trading day, the 21st and then the 24th, where price tested and then rejected Stevie's red line, that was your signal. It's not your signal now. You've got an A to B equals CD that's completing out here. To what level it's going to end at, I don't know. On a daily basis, you are in wave number 6, potentially 7. Says you don't see the top today. You don't see it tomorrow. Maybe it's the next day. Maybe not out here. But no, I don't see the reason to chase this out here. I would say if you're looking to buy this, wait for a pullback. Pullback to where? Hey, Stevie's red line is about as good as it gets out there. Right now, that's at $23.46, not at $25.50. So I say keep that powder dry when it comes to box. Doesn't mean it's not going to go up. I just say the time to have bought is gone for the time being out here. Bought call options, okay, on April 23rd, then there you go. So good. Nice job. Where's it going to? You know, again, we just took a look at those. I think we did those A to B equals CD levels out here, 25.30 or the 1-to-1. The next level would be 26.92 out here. But you're in the late stage, potentially the late stage of this move. So, you know, act accordingly with regard to ticker symbol BOX. The boxy one out there. If we take a quick peek around, see what else is going on out here, we can see that New York Stock Exchange, NASDAQ Composite, Dow each have advanced decline oscillators above zero. That's the bottom panel on my screen. That suggests continuing to move higher out here. You know, am I enthused about where this market is headed to? Has it made a bottom out there? You know, I tell you what I don't like, and there's a few things out here, but I do not like that high-yield bonds are not participating in this move since Thursday. It's not really the most liquid of signs out here. It kind of makes you say, something to think about. Steve Rhodes with TFNN. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. Dow's up 174. S&P is up 16. NASDAQ 100 up 1%, up 64 points. As you may know, on Friday I did this show live from New York, and always great to spend a weekend in the Big Apple out there. And on Friday, I changed my game plan, my evening dinner plans out there, because I was just kind of surfing around to see what else was in town, what else was going on. And just so happened that Steve Martin and Martin Short, for those of you that remember those guys out there, they happen to be kicking off a tour at the Beacon Theater, which is a pretty cool theater, by the way, to go see some music. And yeah, he did play his banjo, but it was the beginning of a tour. Didn't even know they had a tour out there, but it was a funny show. It was funny if you like Steve Martin or Martin Short and they're coming to your area and they've got a lot of tour dates out there. I'd say go. Especially, you know, when you go to a real, you know, some guys that know comedy, and let's face it, Saturday Night Live, the current actors would do so well just to watch these guys, you know, who really provide, and Dan Aykroyd and all the other guys provide humor. I don't know about you, but even if they gave me tickets to go see Saturday Night Live, let alone the music is somewhat questionable that they have on there for acts out there. Not really a big fan these days out there. Almost the same thing with Meet the Press, which I like to call, if it's Sunday, let's get depressed out there, because that's really what the show is all about. Anyway, go check out the Steve Martin and Martin Short show out there. It's always good to laugh. Just remind you how important humor is in our lives. So what else is it that I'm concerned about with regard to the markets out there? We took a look at the liquidity gauge of the high-yield bonds out there. I don't like that. I also don't like the fact that right now the Qs are taking out a swing point. Now, that's not so bad from April 18th, but the equal-weighted ETF nowhere near the April 18th level. That doesn't say go short. I am not saying go Martin short or go any kind of short the NASDAQ 100, but I don't like the divergence, and neither should you. Folks, stay tuned. Your favorite polar bear, my favorite polar bear, David White. He's up next after David. You got Tom O'Brien. I'll be back with you at 3:15 for a small segment. And we'll take a look at maybe things like that hammer candle. Take care, folks. Have a great day. Thanks for being here.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.